In a major sell-off, all three Wall Street benchmarks lost more than 2.5% each, with the Dow Jones Industrial Average falling nearly 1,000 points. This was the Dow's worst decline since October of 2020. All 30 stocks in the Dow ended the day lower, led by Verizon and Caterpillar. Goldman Sachs, Home Depot, and Visa were also big on the downside. The Dow has lost ground for 4 straight weeks, while the S&P 500 and the Nasdaq posted their third weekly decline in a row. Concerns about risks from interest rate hikes continue to reverberate. Federal Reserve Chair Powell pivoted on Thursday, where he backed moving more quickly to combat inflation and said a 50 basis point increase would be on the table when the Fed meets in May. And with this statement, the CBOE Volatility Index, also known as Wall Street's fear gauge, soared on Friday. Investors were already fretting after streaming giant Netflix posted dismal earnings early this week, sending shockwaves through big tech. And so earnings are due next week for the 4 biggest U.S. companies by market capitalization, and that would be Apple, Microsoft, Amazon, and Google. Each company suffered major sell-offs Friday. So will next week be better? Let's take a look. Taking a look here, this is the 2-year weekly on the volatility index, and you can see in the upper left that the symbol is $VIX using stockcharts.com. Now, you can see here all the way back from early 2020 when we had the plunge at that point there, the move on down has been relatively decent with a nice dish formation, but we bottomed and based here and started making our way up here. You can see this point here to this point here to this point here. Those are higher lows. Now, I was hoping for this move on down here to come through the moving averages, but it didn't. It sat on them, and then it bounced and reflected on up. We're at 28.21. Could we go further? Yes. Are we going to go up to 35 or above? Possibly. I don't think that's the probability, but it is possible. Now, the reason I don't think it is probable is moving down here to the lower portion of the chart. You see the MACD. Now, the fast line, if you can see, moved down and through the slow line, and it bottomed and based. Now it's coming up from below the slow line, and that's a weaker move than it is, say, in some of these instances back here where the fast line came down, maybe moved in tandem with the slow line, but shot back up here or reflected off here. Coming from below is weaker. So although it's possible, I'm thinking that will probably remain lower than this previous peak, but I've been wrong before. Now, let's go to our stock charts. And now, keeping with the theme, this is the 2-year weekly chart on the spiders, the SPY, and the close on Friday was 426.04. So we came up to here, but then we've declined down to this level here. So we're still above these lows here. Now, what I'll show you is this formation is starting to look like a reverse or upside down head and shoulders. Here you have one shoulder, and here currently the second shoulder, and then the head. So if this move on down is able to stay above this level here, then that would be a pretty nice head and shoulders formation, and we can finally move on up. We started to move on up earlier this week, but the statements from the Fed chair, well, that changed at least the last couple of days in the market. Moving on down here, volume is doing fine with a nice decline, and that's what you want to see. Here into the MAC, again, my favorite formation, where we have a plunge, a bottom here, a move on up, and then a reflection, and then another move down in the fast line, gives investors a second chance at it. So it is moving on down. Both the fast line and the slow line are below zero, so they're weakening, but they're not so far below. I don't think it's too bad. Moving on down here into the histogram, you can see what happened here. This nice bottom basing, move on up, reflection on back down. So watch that histogram to see if it starts to slow down and then reverse. You can also watch the MACD as well to see if that turns. Again, here, price rate of change, it's not too bad. This move here is about as low as we were back here. So there's definitely some damage, but it feels worse than I think it actually is. Into the RSI, we went down below the 50 line or midline, which we kind of expected. We're at a 36.46, which is a very moderately weak level, but we're still above this level here. So continue to watch that. We may come on down to this point here, which would be about 30. Will it go below? I kind of doubt it. I think the probabilities are that we're going to have a move, continue on perhaps, but we need to make that turn and head back up, and I still say that is the probability, even though it's taking much longer than I expected. Same thing here in the stochastics, and then into the Williams. The Williams was heading on up. It turned tail back down here, but you can still see, at least as of Friday, there is upward movement. This may calm down a little bit further, but I would imagine it's going to stay above that negative 80 level. If it does, we still have positive progress. Moving back on up to the price chart, looking at that head and shoulders one more time. If we can consolidate here, I would be happy. Let's get this stock market back on track and stop being affected by all of the statements by the talking heads. And for today, that's ChewDog Charts. Thank you.